Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And Anthony?
And we're going to talk about Jerome Powell's speech and his decision to not raise interest rates yet, and how that will affect TLT and if there's going to be a recession.
Two Super Guys Trade Stocks.
So, for those of you who did not see the news, the Federal Reserve kept their key interest rate flat today. That's pretty much what the market was pricing in was going to be no increase. Now, that does kind of contradict the dot plot, if you will, from the last meeting we had in September, where they were anticipating the average kind of Fed governor was anticipating 25 basis points sometime this year. They only have one meeting to go. So potentially, maybe at the December meeting, we could still see a little bit of tightening. But really, this is a good indication of where Powell's at, because after they get the press release, he then gives a speech. If you actually look at the press release here, basically, they changed almost nothing. It's amazing. It's just like this is going to be the easiest job in the world writing these things. You just like change a couple words, and that's it. So CNBC does this nice little service here, if you will. Every time that they release one of these statements, they go through and they show you all the changes. Obviously it's not solid, it's strong, and it wasn't expanding, it's expanded.
Yeah, I mean, that's an art form. It's brilliant.
Yeah, it almost has an earmark of like Bill Clinton, where he had a question what the word is means, but
Nice.
I still get it. But they kept it flat, didn't really change a lot. During his press conference, a lot of the same kind of topics come up. You really see the people are always trying to get Powell to show his hand a little bit and say some things he doesn't really hasn't really disclosed before. But he's almost like a robot. I kind of wonder who has better press conferences, Jerome Powell or Bill Belichick?
Bill Belichick? I knew you were going to say Bill Belichick. I knew it. Okay.
He's like, we're on to December meeting. Basically, I would lose my mind if Powell said that. We're on to the next one.
Yeah, I mean, honestly, I've listened to those questions before. A lot of them are just dumb. You just can't answer that. You're like, what would you do if you were, not just Federal Reserve and you can do other things? Like, he can't answer that. Stupid question. Don't answer that question.
Yeah, it's a completely ridiculous question. But he reiterated his points about the question that they're looking at right now is whether or not they're in a sufficiently restrictive kind of monetary policy stance, and that whether or not they will have to increase rates any further. So that's question one. Question two is then how long do we keep it at these rates? Because of course someone asks like, when are you going to cut rates? He's like, when are we going to cut rates? Like, what would we barely talking about preseason here. You're trying to ask me something about the playoffs. Like, that's a completely ridiculous question.
In a year, they're going to ask that every meeting, but
yeah,
I would say at least a year. Just keep it the same.
Yeah, that's how it goes. But he was kind of consistent about saying we've made some good progress, got more to go. Particularly, he highlighted the fact that we made 60 basis points of progress on the PCE data in the third quarter alone. So that's a pretty significant number. He goes, and I'm really happy to see that. He goes, and if you look at the dot plot on our predictions, we're looking at well into the twos during next year for PCE rates, and then down into low twos by 2025. So he said, and that's consistent with prior episodes of inflation and how long it's taken to control them. And someone did ask a question about recession likelihood of next year, whether or not that's still in their kind of predictions. And they said no, it was not actually in their predictions as of this meeting for next year at all. That the economy's been still very resilient, and he does not see that as a likelihood at the particular point in time. And this was interesting. I don't know if you've mentioned this before, but he kind of talked about the dynamic we were fighting here about how the cycle was created with pent up demand post, and all the savings post pandemic, and then created more kind of booming in small businesses where they had to increase hiring and they're competing for employees, so that wages had to rise. He's like, we saw this little cycle continue, and he goes, and that's the real question right now we're trying to face is when are people going to run out of savings? We still saw spending rate go up 0.7% last month, right? So there's money out there still that households are doing. Yeah, credit card debt is now over $1 trillion, but that's the real question that's driving this still to this day is how much money does the average American household have? Can they continue to spend on goods and services? So we'll see.
And also, American households don't have to have money to spend it. So that's
swipe it.
There's
my wife there. You swipe it, and then it becomes Vinny's problem.
So there's a couple things related to TLT to this. So ideally, there would have been a rate hike because then it makes covered calls a little bit easier and cash secured puts. I am at a rough place in mind because I think covered calls are too risky because There's no really range for where it's going up. It kind of bounces off 86 a lot, but I'm trying to do puts near 80, and it just every time it gets to 81, I'm about to pull the trigger, it shoots up. But there's some TLT things that happened the last week. So Bill Ackman covered a short, right? He's saying it was too risky to remain short on bonds at current long-term rates. He was short for a couple months, made some cash.
Yeah.
The other thing here that he said, let me move this. Ugh. The economy is slowing faster than recent data suggests. He wrote this on X, okay? And he said there's too much risk in the world to remain short bonds at current long-term rates. How do you feel about the economy is slowing faster than recent data after Jerome Powell's speech?
Yeah, I don't know. I haven't really seen evidence of that. Both from the number standpoint, we grew at a 4.9% annualized GDP basis in the last quarter. That's a big number for an economy the size of the U.S. growing at 5% a year. That's big.
It's not sustainable.
3 is what you hope for. Okay, so we're even if we slow slightly, we're still growing at a very fast clip.
That's like meta numbers.
Yeah, well, not the recent quarter they blew off the doors at 23% revenue growth. But if you actually go and look at like anecdotally, right? Like every time I go out shopping with my wife, I'm always kind of thinking about this. Like, God damn, man! Like people are still out there. People are still at it seems like they're at a above average kind of spending, environment than they were pre-pandemic, right? Like I sent Dylan a picture from the Apple store when I was there this last weekend. I was like, this place is freaking packed.
Yeah, it's packed. Full disclosure, if you guys bought the new iPhone, it's the same as the other one. Titanium's not like a new metal for phones, but they're marketing the hell out of it. So the other thing is Chinese investors sold about 21 billion-ish in equities and treasuries. It's the most that they've done in 4 years. Most of it was U.S. Treasury bonds and stocks. It is hard for me to read into this a lot because they have their own crisis happening right now with giant property groups. This is not as simple as this being bad for bonds. There's a lot of moving variables here.
Yeah, people would love to spin that into like a China versus U.S. economic
sure.
fight, but not even approaching that level yet.
I don't. It's not even close. Also, it leaves out the fact that they bought a bunch earlier in the year, but that's fine. Whatever. And then I like the strategist at Barclays said this week that investors shouldn't expect the U.S. Treasury yield of 5% to come down anytime soon, except in the event of recession. The hurdle for a bond rally is still quite high, despite data continuing to show a resilient economy. The consensus still expect it to slow very sharply in the coming quarters. Also kind of different than what Federal Jerome Powell said. Repeated misses beg the question whether the consensus has been overly confident about monetary policy being too tight. We argue the policy is barely tight and risks are skewed towards continued upside surprises.
Barely tight, huh? Mm-hmm. Isn't the name of your memoir?
That's pretty good.
Yeah, but I mean, I don't know. What exactly is an economic prediction worth? That's what Powell said. I don't want to give you an exact number on things. He goes, because that's no way that's going to be true. So then I'm going to look like an idiot. 3 months later, he's like, that's just how it goes. He goes, when you try to put out these really kind of grandiose predictions. But he said, as of right now, the Federal Reserve is not anticipating a recession. That's not in their current expectations.
It's about as useful as me saying TLT is going to work out great. I truly think it is. I'm no one. So I could be wrong here.
Yeah, exactly.
This has nothing to do with anything that we said. I just thought that this was very, very interesting because housing data came out a little bit early last week, and it was way better than people were thinking. People were thinking that there's going to be less houses bought, there's going to be less houses sold because of interest rates being so high. It did not show that at all. Let me see. Let me move our faces here.
So the 418,000, is that overall the median sales? This is just new homes because 430,000. Oh, average.
New.
Okay.
New residential sales.
The median overall home price in the U.S. was 430,000 last I knew, but that's why I was just kind of curious how kind of correlated with that number. But the same regional ballpark.
So the seasonally adjusted annual rate was 759K houses sold for September. Previously, it was 676, which is the revised August rate. So, I mean, it's not what you'd expect because I feel like I keep on seeing stuff from unusual whales, like tweets being like, no homes. Like they're very doom and gloom. And then the data comes out and you're like, well, that doesn't match.
Yeah. Well, I mean, their job is to generate clicks, but mortgage rate around 8%. That's something Powell talked about, and how the housing market has moderated. Anecdotally for me, I'm starting to see more homes in my area, which I'm in the northeastern U.S., come on the market and remain on the market, even seeing a price cut or two before they're finally sold. So maybe we are getting towards, at least locally for me, a point where we're going to have to pivot a little bit in terms of the direction of the overall housing market.
Possible. I hope so, because things are way too expensive. All right, guys. Let us know what you think.
Guess the next one.